the lines between like Tradfi and crypto will continue to blur. And I think maybe before we even know it, that you kind of like hit a stage whereby a lot of non crypto native people are already unknowingly using like stable coins as a form of payments.
Agentic commerce happening on blockchains can almost be viewed as a necessary condition for the entire crypto neobanking and DeFi Tradfi convergence pieces to play out.
The biggest thing that stand out to me, or what they have done for the industry, is that they are literally the one who actually overcame the core skepticism around algorithmic or synthetic stablecoins.
Who will the value actually accrue towards? Yes, DeFi is getting used more and more, but are DeFi projects and their coins actually the beneficiaries? GM, and welcome back to episode 83 of the Odyssey Pod. Today we are joined by Cheezy, who is part of Memento Research, and he has a lot of articles and theses around the crypto neobanking and TradFi DeFi convergence. So I think these have been some very prominent themes over on Twitter, but also on platforms like LinkedIn, where all the like digital asset teams of banks and fintechs are discussing these topics. So great having you on. Thanks a lot for joining. And how are you doing?
Thank you so much for inviting me to this podcast, Max. Yeah, I'm doing great. Doing fine, especially in these market conditions. I think, business as usual, I guess.
Yeah, we will definitely talk yields and yield opportunities later in the show as well. But let's start by hearing a bit about your background. I know you were previously at Pendle, so one of the like most prominent and fastest growing teams on the DeFi side. What is your background story? How did you get into the industry, and how did you get to the point where you're at right now?
Yeah, so I think my journey started back in late 2020. That was actually when I first finished my enlistment. Context is I'm from Singapore, and as a male citizen, we are all enforced to actually be conscripted for 2 years before we actually further pursue our tertiary education or university. After enlistment, I had had a 9-month break before my university start. And I was just looking into like how to get started and like what to invest, since pretty much I'm entering adulthood like, after university. So that's when I actually chanced upon like Bitcoin, Ethereum, and this kind of digital assets actually appealed to me. I think it was more of the volatility that appealed to me that got me in. Yeah, that's when I discovered like, oh, there's like a whole new universe out there whereby you can build smart contracts on Ethereum, and there's DeFi. So fast forward, I managed to witness like DeFi summer 2021, when how it first started and how it actually took off, and then came a bull market. So yeah, I was kind of in the trenches back then. There was the NFT cycle that I was very heavily into it, and things like that. There are a lot of like opportunities were presented. And I guess I was lucky at that point of time, because at the end of the bull market, things kind of took a turn, and I was actually kind of looking for an internship opportunity since I was in school. And just nice, Pendle was in the midst of building their V2, and they were looking for interns. So yeah, I guess it was a bit of luck. I got a friend who kind of referred me to join as a software engineering intern, and I took up the role, of course. Ended up doing mostly like backend and analytics. And then I stayed, I think, 1 year after the internship and worked part-time with them while still in school before I left. Yeah, I think fast forward today, I kind of so-called left the engineering side, went more into the research domain, and trying to do more maybe opportunity discoveries and understanding more on the market landscape side rather than just core engineering itself.
No, I think there are not that many people who have an engineering and a technical background who then pivoted into longer form writing and research. So I think you're at a quite unique position there. Maybe can you tell us a little more are you forming your theses right now? How are you looking at the markets? And how did you end up being a part of Memento Research, and what are you guys doing there?
Yeah, sure. Maybe I can just share a bit more on what Memento is. Memento Research first. It's basically a research publication that started by our boy Ash. He's one of the quite influential people in the crypto industry. And yeah, I work with him closely or his team to actually like produce deep dive research reports on specifically on crypto protocols and sectors. How we actually form our thesis, maybe I can share more on our motivations. We are kind of here to actually provide more than surface level coverages. If you realize that most of the publications, they only highlight maybe the non-technical stuff or narrative highlights of what has happened. But when we combine our expertise, Aboyesh comes from a VC background. I came from a technical background. We kind of are able to actually come up with a comprehensive like research piece that spans across understanding like technical protocol mechanics, the value accrual mechanisms. What does this primitive actually allow you to do or realize, or what is the true potential of this protocol in the context or drawing in relation to maybe like in Tradfi or similarities to how things were developed back then when many financial instruments were maturing back in the kind of the early days. So DeFi was kind of like a mirror to what TradFi was back then, maybe a few decades ago. So I guess, yeah, a big advantage of us is that we kind of have experience from DeFi since most of us were already here since DeFi summer 2021. And it kinds of gives us a lot of uh, thesis because of the experiences that we've been through. We saw how Uniswap came about. We saw Curve Finance, the whole idea of VE33 coming about, and what worked, what didn't work, liquidity mining and things like that. So yeah, I guess that created kind of gave us an edge in that sense, and hence the ability to come up with what we are actually writing. So I think TLDR is that we're trying to basically allow users to understand how value actually flows through a certain protocol or a sector, and whether or not or how it can be sustainably captured based on what is going on.
Yeah, I think a growing concern with the integration of DeFi into traditional finance, into centralized finance, and the convergence of all of these verticals is that who will the value actually accrue towards? Like, yes, DeFi is getting used more and more, but are DeFi projects and their coins actually the beneficiaries of that? So, what is your general opinion on that? And maybe we can use that as a transition to go more into individual projects where you think we are well positioned to actually benefit from the growth of DeFi.
Yeah, sure. I think the first thing about benefiting in DeFi is that I would separate the idea of the underlying protocol mechanism with the token itself. So token itself represents a different thing. It's more of like you buying into a stock, but without any fundamentally driven kind of backing itself. Because you realize in fact, 99% of the protocols out there in DeFi, they are not profit making at all. So the idea of associating a token like a stock in a traditional market is definitely flawed. Uh, what we tend to focus more on is the DeFi or the fundamental aspect side on how this underlying protocol mechanism is a innovative and sustainable way to actually enhance a certain asset's productivity. Yeah, that is the core value that we see. And the good thing about DeFi is that firstly, it's permissionless, allows anyone to participate. Secondly, because everything is on the blockchain and they adhere to certain standards, just like how our token standards are created, ERC20, etc., etc. There's this that the key term that I will use is assets open composability, whereby you're able to utilize a certain asset and put it through many layers of use strategies stacked on top of each other and maximize the productivity out of it. So a quick example is imagine you have a yield-bearing asset or maybe a tokenized T-bill asset. You can actually LP or lock in a fixed yield on Pando itself, take the PT or the principal token, go to a lending protocol, collateralize and borrow more tokens out of it. And then you actually do a loop to actually maximize your use and enhance the productivity. Yeah, so that's one classic example that why DeFi is superior in the sense. This is definitely impossible in traditional finance or CeFi because everything is just stuck within a single platform or or an avenue. If your money is deposited in bank, at most that money can only be accessed to products within that bank itself and nothing beyond that, even if it's complementary. So I guess that's the beauty of DeFi.
So one of these projects that you have been writing a lot about is Mantle. Can you walk us through your Mantle thesis? And L2s have been a little bit in the spotlight again a few weeks ago when Vitalik posted that the original solution they proposed to the lacking scalability of ETH L1 has kind of become obsolete with the main chain scaling as well. And we've seen that in the drop of gas costs quite significantly over the past months. And now there's somewhat of an existential crisis, but some of the L2s are either positioning themselves in the neobanking sector or they have backing of a large centralized exchanges. So the ones that are coming to mind here are Base, Mantle, and Inc. And yeah, you've been diving quite deep into Mantle. So what's your general thesis there? And yeah, why are you bullish Mantle and MNT?
All right, thanks for the question. So I think this brings me back to the point of L2s. L2s generally are a good thing. I think this span from 2 to 3 years ago, back then when Ethereum was facing a huge bottleneck issue in terms of throughput. And then gas fees were going insanely high and we needed a way to actually scale. So that's when Arbitrum and Optimism first came about. Everyone was bullish. Definitely, I was also bullish for sure because for once that you're paying cheap gas fees and then, you can do many more things with that. But the reality is that if you have more ecosystem, the problem is that you will fragment liquidity and this concern or the problem of fragmentation is actually very, very significant. Because right now, if you were to have many ecosystems with many different kinds of primitives, it's not going to allow meaningful adoption if the demand or the capital inflow does not match the growth of quantities of these ecosystems. So back then when it was just arbitrary optimism, I think it was still fine because it was just a few ecosystems. And then the multi-chain landscape came about, or the L2 thesis. Anyone can launch a roll-up as much as they like, but it was never feasible. And I think from this lesson, the biggest thing that you can draw it from is that distribution has always been the biggest bottleneck. And also, the thing about doing DeFi is that, yes, it sounds amazing, it sounds fun, but the reality is extremely complex. And because of its complexity, it prevents a lot of newer people from entering. So we kind of hit a growth stage whereby the crypto native audience size is not growing anymore meaningfully or is kind of stagnating. Whereas there's this huge size of non-crypto people, like the Tradfi people who are actually interested because of the popularity of cryptocurrency, but they don't know how or they don't dare to actually take the leap forward too. So yes, now it brings back to why I think Mentor is a good place or is doing well in the sense is that just like Coinbase and Binance. So you mentioned about Inc, Base and Mentor. To me, I think the three biggest players here is Coinbase, Binance, and Mentor because of Bybit. So they themselves, if you look at a similar trend, all of them not just own a huge or tier one like centralized exchange, but they also go beyond just the centralized exchange thesis and also try to own the entire DeFi stack. So like if you look at Coinbase and Binance, they have their Coinbase wallet, Binance wallet. ecosystem, Base L2. Base L2 is one of the biggest, if not the largest already. They're on par with like Arbitrum. For Binance, they have their BNB chain, which has a sizable amount of like users right there because of their insane distribution. And last but not least, like Mento and Bybit, they kind of just entered a very, very strategic partnership whereby they're kind of joining forces together to merge their CeFi distribution with their established DeFi ecosystem. So unlike like most L2s out there, I think Mento has kind of been quite early in the game, and with one of the largest like treasury DAOs, they managed to actually bootstrap and establish a lot of DeFi ecosystem primitives on top of them. So right now they're trying to in fact integrate more DeFi opportunities into Bybit side to enable that CeFi distribution. One big thing is about this is that centralized exchanges, they have the power to actually abstract and simplify the complexity of DeFi to kind of attract meaningful capital inflows and so-called user participation just via simplified products such as vaults, which is one of the things that I covered in the article. Simple products, even like earn products, if you look on Binance and things, or even Coinbase, where you are able to, in fact, put your stable coins into Morpho just without even like having to use a wallet and interact directly with Morpho itself. So yeah, I think this compounds and builds a strategic moat on its own, and I only foresee that their market dominance will only continue to compound further as things mature.
How do you think that will benefit the MNT token? Because even if Mantle is very successful in their distribution, recurring problem remains whether that growth will actually reflect in value accrual. So in all the different parties involved in the success of Mantle, so also Bybit, of course, Mantle with the MNT token, other projects that they use for generating yield, let's say using Pendle, Morpho, etc., as the base layer of many yield products. How will that value accrue back to the MNT token?
Yeah, good question. So I think there are many layers to value accrual in Mental. The biggest one that I feel that value adds to the token's value accrual mechanism is definitely the centralized exchange focus value tied to it. So if you realize that there's a tons of opportunities you can use Mental for on Bybit, such as the mega drop or the launch pool opportunities, just something like Binance launch pool whereby you stake the MNT and then you gain like an allocation to airdrops or like a fixed valuation to new tokens that are being listed upon TGE. And those, especially in good times, right now things are different, but in bull markets, they tend to do very, very well because of how these MNT owners are able to actually get in a very, very low valuation. And once TGE, you can actually instantly profit out of it. Apart from that, Bybit is actually exploring many more ways to tie the token to the performance of the centralized exchange. And it decentralized, and Bybit itself is already a very established exchange. They have proven fundamentally well. And yeah, if the MNT token is getting more associated to Bybit, the value makes sense right there. Just like how BNB saw its moment when it was so intertwined to Binance performance as the largest centralized exchange. Apart from that, Mento is also tackling on many fronts. So if you look at ME protocol, liquid staking, they're doing pretty well, I would say, in terms of like innovation developments and partnerships, of course, because liquid staking is kind of like changing into a institutional game already. In fact, BlackRock just managed to launch their staking ETF. Yeah, it's a huge milestone for the LST landscape as a whole. And Memento is also trying to also even break into the Tradfi side, whereby they're offering something called Memento Index 4. It's basically an index fund that holds a basket of cryptocurrency assets. And yeah, all this, they also do like Neobanking, like UR Global app, which is basically just a Revolut, but for crypto itself. And yeah, all these product suites kind of tie back to the brand itself and is supposed to accrue value to MNT token. So yeah, in terms of how it's being positioned, it's definitely not just a L2 token anymore. It kind of covers everything that they're trying to build in a unified ecosystem.
So let's assume the neobanking thesis plays out. Who do you think will be the biggest beneficiaries, both in terms of serving as the front end of neobanking, but also in terms of the protocols being used to generate the yield products that will be integrated in the backend?
Good question. For new banks, honestly, I think the centralized exchanges will still be the biggest beneficiaries because of the sheer size of user distribution that they have. Right now, I mean, we do see like EtherFi doing well. But EtherFi started off as a liquid staking protocol. Then they kind of changed to the card. In fact, I also use EtherFi card right now because of their cashbacks and how they are able to actually pull or allow users to efficiently utilize or put their ideal funds to work in various vaults that they have already created back then during their RRT phase. So in that sense, they are doing pretty well in terms of that. But I think distribution still remains the biggest hurdle, and only the largest players would probably be able to overcome that best. And they are likely to do so. So even beyond like centralized exchanges, if you look at the TradFi payments giants, MasterCard, Stripe, they are also kind of already seeing, or even PayPal, they kind of saw the opportunity and also see that where this landscape is heading towards, since stablecoins as a payments layer is actually picking up so fast, coupled with like increasing like regulatory clarity. Yeah, they are kind of making early moves so that they can create or leverage on their existing distribution to take advantage of the capital efficiency to, enable more efficient payments like remittance, global payments, etc. I think the landscape would probably evolve very significantly, and my thesis may be wrong actually. It's still too early to say, but I think one thing is for sure, the lines between like TradFi and crypto will continue to blur, and I think maybe before we even know it, that a lot you kind of like hit a stage whereby a lot of non like crypto native people are already unknowingly using like stable coins as a form of payments to finance their day-to-day kind of like needs.
No, I agree a lot with your general thesis there that the convergence is happening faster than many of us think. Just a few days ago, I discovered that in Germany, where I am based, on like the German LinkedIn bubble, there are quite a few, couple of hundred like active people in the like German banking, digital asset, whatever ecosystem that you have never heard of before. And I mean, of course, there's a lot of corporate yap and lots of like, roundtables about whatever, and not yet a lot of substance and not a lot of product pushed through. But the recognition of blockchain as the superior infrastructure and as the superior rails for transacting and like shifting risk and shifting returns is definitely there. and there is a complete divergence in the sentiment between the TradFi and fintech players starting to use crypto and like the deeply entrenched crypto native people on our side on crypto Twitter, because all that we are used to is price action going down, whereas for them that's a non-variable in most cases, and for them it's only about like using the technology for the products that they already have and for the assets that they already have. So definitely curious to see where all of that goes. Besides Mantle, you've also written articles on a lot of other protocols. So do you want to pick a few that currently excite you and dive a little deeper into your thesis around them?
Yeah, sure. Actually, I do cover a lot of protocols, but I think one thing still remain with me. I feel like Pando is still gonna do much better, and
Yeah, I
I
think
spend
we
most
have
of my
a
time
mutual
actually.
favorite there.
Yeah. So maybe just some context. They basically built a 0 to 1 kind of like primitive for U tokenization. Is something that no one was actually building. And on hindsight, when I first joined, it was before that they launched the V2. I honestly think it was a pretty great product. The only issue that I saw, or like concern that I saw was that is DeFi, or is the DeFi audience ready for such a more complex primitive? Because it's unlike the Uniswap kind of primitive whereby X times Y equals to K, that kind of thing. And then you just swap in token for another token. Yeah, this one is uh more complex on the math, I would say. But of course, uh they managed to overcome that, and I really think that they really did the impossible. Especially when they found like market fit back then during the liquid restaking narrative. So the whole idea about yield tokenization is that you split the yield from the underlying principal from a yield bearing asset, and you allow people to actually trade the variable implied yield, which is the YT. And on the flip side, or serving as a counterparty, you allow people to actually lock in the fixed yield or fixed implied yield by just acquiring and accumulating the principal token. So this kind of that PT part is also very important because it is probably the first ever time whereby DeFi saw something that could be related to fixed rates. And fixed rates in TradFi is actually a very, very huge thing. So of course on Pando you can do many things with it. Yet Pando's way of like, or V2 way of creating markets is that it has a expiration date. So you can kind of like create a yield curve out of it too. Just like how you have like short term treasury bills to long term use itself. And yeah, it was pretty interesting back then when I first joined, because I wasn't very, very savvy in like finance either, since I was majoring in computer science. Yeah. And fast forward today, they kind of expanded another like core product, which is borrows. So it's a funding rate like derivative that allows people to trade or speculate on just by the funding rate itself, which is very, very capital efficient compared to you trying to do it with a proper notional size on a POPs platform itself. So why I'm very bullish on Pando is because they'll be constantly creating things that are 0 to 1. Firstly, if you realize it's all about the first mover advantage here, where you see Pando has already commanded like so much dominance in the U landscape itself, and it continues to compound over time. Even though you see like Fox coming out, I won't mention them, but basically I think it goes more than just what they are building. Pando right now has also turned into a very, very credible brand that is associated with many funds and institutions. And in DeFi, I think that is the true mode that any protocol can achieve. It is not about how innovative or how advanced your tech is. It's more on how much people can actually trust you. Just like how you see it in maybe in the lending space. I think that is the most obvious demonstration. You look at how Aave, despite how V3 is not the most efficient like lending model, it has a lot of trade-offs and limitations for sure, but it is their dominance and capital inflows continues to grow very significantly. because of the trust, the reputation, and how the entire journey they have started as ETH land back then until now, that kind of like got them to where they are today. So I see the same as what Pendle did for the EU sector itself. And yeah, I think even leading on to the coming years, Pendle definitely will evolve and also continue to lead the innovation in terms of DeFi. So yeah, that's why I'm very bullish on them.
Yeah, I very much agree there. Back in late 2022, I co-lectured introduction to blockchain course at my university. So I have a economics and finance background, and I thought like, okay, what are some interesting DeFi protocols besides the basic ones like Aave and Uniswap and some stablecoin issuers that I could talk about to the students there, and that they would also find interesting. And Pendle really was the one that came to mind even back then. So yeah, for me, it has been really great to see that vertical growing. And I personally think that the whole interest rate derivatives and option space are primed for another breakout moment in DeFi. I mean, with interest rate derivatives, you have Pendle, you have Spectra. Now with the Meta Vaults, we'll have them on the pod next week. There is Supernova on Mega ETH, and like everybody is getting more aware of that primitive of trading rates and the necessity for fixed rate lending. Morpho is doing a lot of initiatives in that field as well. So even down the stack on the level of the lending markets themselves, you see innovations happening there. So for me personally, that is a very interesting sector to monitor as well, not only across the EVM but also on the SVM with I think it's is it Exponent and Rate X. But very curious to see what is to come on the lending market and interest rate derivative side. You've also talked quite a bit about Maple's syrup and about Ethena. What is your current outlook on these? I think among the DeFi native and like financially savvy people on CT, these have been gaining a lot of attention as well. Everybody likes syrup. Everybody likes the token there as well, but that has been stagnating quite a bit over the past couple of months. And with Ethena, everybody loves the product and the ability of them having tokenized the basis trade, but the token has been on a down-only journey basically for the past year. So what's your current view on these two?
Yeah, good questions. At least for me, I tend to try to look things at a very fundamental perspective. But I mean that I do not associate how, like, if a protocol is doing fundamentally well, it doesn't mean their token will do well. Because having been to the VC side, I understand that there are a lot of things that are tied to a token's price action, and it has really nothing to do with fundamentals. Fundamentals, even if you're doing well, your token can be structurally not in place to actually perform well. So one example is if your float is too large and you have a lot of like unlocks coming, it's very hard for retail to absorb that sale pressure. Very hard for retail to come in to actually counteract that incoming sell pressure. And there are a lot of things that goes on. So all these tend to have nothing to be associated with the protocol fundamentals itself. So usually I only talk about like how things are doing because I like it that way, and I try not to speculate too much on tokens. Maybe back then, but not really now. I like to look into more on the fundamental statistics and how things are doing. For Ethena wise, I think the biggest thing that stand out to me, or what they have done for the industry, is that they are literally the one who actually overcame the core skepticism around algorithmic or synthetic stablecoins, especially like Luna blew up, and then everyone's confidence was erased. So back then, when it first started, there was a lot of people coming in like, hey, is this going to be another Luna and stuff like that? And over time, through many Black Swan events, they actually proved people wrong. So yeah, it was battle tested. Their reputation, in fact, compounded and grew, reinforced over time. And as Black Swans occurred, their pack remained and they overcome each hurdle. Yeah, right now, today is highly trusted by many institutions. And that's how they earn their title as one of the leaders in terms of like you bearing stablecoins. And I also see them as that paved the way for this whole you bearing stablecoin narrative whereby you are seeing so many innovative models out there doing many advanced strategies to create just a synthetic dollar out of it. And uh yeah, while they are doing well, the token itself is a separate thing because you cannot control like how they do their round raises and how they structure their tokenomics and things like that. So it's not definitely is not intertwined with how Ethena or the protocol itself is performing. So fundamentally, they're doing well, just like Maple. And what stood out for me in Maple is that right now we are currently in a bear market and things are not doing great. But if you look at their numbers, they've actually one of the exceptional performers right now. So they have currently like 3.8 B asset under management, which is pretty huge for a protocol. Just in January actually, they kind of have their all-time high monthly revenue of like $2.57 million. So why I think this is significant is because December and January has been quite brutal for the crypto industry, especially after like last year's 1010 incident that it showed us like how cracked, how destroyed this whole industry is. Even right now, if you look at their syrup USDC or syrup USDT, their underlying yield is already actually outperforming comparable like stablecoin yield products out there by 1.2% higher. So right now they're offering about I think 4.4%, whereas like the traditionally like stablecoins out there are just less than 3% in current market conditions. Yeah. One thing about them is that they are one of the early movers to tap into a unexplored sector, which is like on-chain private credit. So of course, as a first mover, they have established so much trust and reputation over time. And right now, their core underlying stablecoin is widely integrated in many blue chip DeFi integrations like Sky and Aave, whereby there's very huge utilizations, which is pretty healthy for RWA based or stablecoinish protocol. So that stood out a lot, and they just had a shareholder call, I guess, or like token shareholder call, and they were talking about how all this would actually accrue value back to syrup. And yeah, I think even naturally, I think with such market conditions, it's still very. The thing about crypto is that it heavily relies on where Bitcoin hits towards. So if Bitcoin or maybe the majors, they don't budge, it's tough for any like token to actually do well, unless of course there are exceptions. But even without any like good token performance, at least the fundamentals speaks for itself. And yeah, it probably set itself up for one of the strongest as one of the strongest performers when sentiments eventually pivot for the better.
So I'd say that both Maple and Ethena are liked by many in the DeFi trenches, yet there still is not a proportional relation between the likability of the product and the performance of the token. While you are very focused on the fundamentals of things, how do you end up expressing your thesis when you say, I like the project, I like what they're doing, they're growing, all the metrics are looking great, but their token might have some suboptimal supply dynamics, a lot of unlocks coming up. Is it just something where you're looking for proxy bets, or in the case of Syrup or Efina, are you trying to participate on the yield farming side of things instead of direct exposure to the token? Or how do you approach these questions?
Yeah, good question. I think back then, maybe a few years ago, I used to kind of have a how do I profit first kind of mentality. So like how do I tie the tokens like performance to the project's performance or fundamental performance? But today is not the case. I'm more towards like how y- how opportunities or you opportunities can present itself from the projects, and it's more of me coming from the appreciation of how DeFi can grow as a whole industry. Uh, so this is kind of like a far shift away on how will whether a token will actually appreciate much in prices and things like that.
Mm.
So yeah,
Besides Pendle, MNT, Efina, and Syrup, are there any other project that currently excite you? Maybe a little bit less known and less established ones?
but right now, okay. So on Pando, there used to be pretty lots of good opportunities. So by I mean good, I'm specifically referring to yield-bearing stablecoins that are kind of offering you up to 20% fixed implied yields. But today is not the case because of the poor market conditions. So a lot of opportunities have kind of died down. But I think one project that stood out just recently is actually TO Network. So they're doing like their RWA kind of project that's actually tokenizing gold and also treasury bills on they're built on Arbitrum. And recently they just released like a vault initiative or synthetic dollar. They call it THUSD. And this is built on top of a strategy or a multi-pronged strategy that utilizes a it's kind of like a same model as Ethena. You can think of it like a delta neutral strategy, but using gold as an asset, because right now gold is pretty hot. And if you look at the open interest, of course, is significantly much higher than what Bitcoin and ETH has, considering the maturity of that commodity and also how globally recognized it is as an asset itself. And I think
And
this
with
is,
Theo, I was
yeah,
very impressed by the demand for their THUSD vault. I mean, filling up 100 million in the span of a couple of hours in the current market conditions is basically unprecedented ever since we have topped in late October. I mean, there have been some ICOs. I think it was either Monad or Mega Eve that saw quite a bit of demand, but yeah, on the like very DeFi native side, I think this is a first time ever since yeah, markets have flipped that badly.
yeah. So it's actually impressive, very impressive that they create that they managed to hit the caps just I think less than a day itself when they released this. And I think it's not a surprise because of how historically backtesting has already shown that it can accrue about 8.3 APR, 8.3% APR on average just in 2025. And this does not even include the additional returns that you can get from stacking on top of more DeFi primitives, just like how you can tokenize on Pando, then put it to Aave or Morpho, and then continue, enhance the yield in that sense.
On the yield farming side of things, because I know you're also active on DeFi yield farming, yields have compressed a ton over the last couple of weeks, specifically. Are there any opportunities you're still finding exciting, or where's your money at right now, if you're willing to share?
Yeah, so I think currently in bear market, I'm of course not very deep in the trenches right now. In fact, I've scaled back a lot. I think a few years back. I think back then it was the thing about being in the trenches is that it requires a lot of time. It's very time consuming, and yeah, it's a bit unsustainable. So for me, wise, I think my strategy or plan is very simple. Take opportunity of like trustable and scalable like stablecoin use while accumulating majors, or specifically Bitcoin. Yeah, that's all.
I think that is a very reasonable and mature approach to the markets. I mean, of course, when people do not have a large portfolio, I think that DeFi overall right now just seems very unattractive because, I mean, if you're sitting on like mid five digits or even lower six digits, an 8 to 10% APR is just not going to cut it. Like, that's not the life changing wealth that people have been coming to crypto for. And yeah, I think playing it somewhat defensive and a little more selective in conditions like these by focusing on BTC, maybe a portion of ETH and Sol, and hype seems to be rising in the ranks of becoming the fourth major right now, is it is a sensible approach to markets in my opinion as well. So yeah, since we're coming closer to the hour, are there any other topics you'd like to cover, or maybe any hot takes or controversial theses you're having in the market right now that you'd like to share?
Not exactly any controversial thesis, but I think this year might be a boring year. Maybe I think for in terms of narratives wise, only like prediction markets and probably the agentic or AI side would pick up, in my opinion.
Yeah, I think agentic commerce and the whole X402 conversation, that will have a lot of impact on whether the crypto neobanking thesis will play out or not. If all the agentic commerce will just happen over existing credit card networks and they deem their current infrastructure sufficient for the start, like the more it progresses, the harder the switch over to crypto will be. So I do think that agentic commerce happening on blockchains can almost be viewed as a necessary condition for the entire crypto neobanking and DeFi TradFi convergence thesis to play out.
Yeah, for sure. Especially with the current advancement of AI, a lot of things are going to change for sure. Yeah, even though markets have been quiet, if you look at protocols like virtuals, they've been really at the forefront of developing like many standards. Be in foresight of seeing how agentic activities will probably go mainstream sooner than we expect. Uh, yeah, it would definitely be interesting to see how it pans out this year.
In note of AI, have you found AI to be useful in your research processes? And if so, what are some tips you can give to people how to stay on top of markets using AI?
Yeah, good question. Actually, I do use AI a lot in terms of my workflows. I still do like coding right now, even though I'm more on the research side. But most of the tasks or productivity has been uplifted by AI for sure. I think Claude is exceptionally strong in that to help me. In terms of research wise, funny thing is I still do not rely very heavily on AI. I tend to just go to places I'm familiar with finding data, because I don't think AI is that advanced to actually find you the best Dune dashboard that suits the protocol. Because usually there are multiple publishers or authors publishing different kind of metrics, and you also got to be able to eyeball and manually verify that the queries that they created are somewhat accurate and not too far off, or they're actually usable. So we're not at the stage whereby AI can completely replace the research phase, especially for DeFi. But in terms of like how I can organize my thoughts, pointers, maybe this is AI does help a lot in that sense.
I agree a lot. I think regarding research, when you ask it crypto related questions, If you niche down very far, it is helpful at explaining certain concepts. But I think what you just mentioned on the data side or aggregating niche information, that is still a little more difficult. Also, I think its views on crypto are very mainstream in a sense. Like, for example, if you ask GPT what are like the most interesting crypto tokens, it will probably spit out like XRP and Cardano and something in the direction of that. I think Grok is much more useful in like looking at stuff happening on CT. So I think for example, for like preparing these episodes, it's always useful to just like have Grok scrape information about the projects, what they've tweeted about that I'm having on the pod, or the accounts that are associated with their team members. But when it comes into like deeper research, I still think that there's a long way to go.
Yeah, for sure. But I wouldn't be surprised if things start getting much more better, just
Agree.
maybe in a
This
few
is the
months. Yeah,
worst
sure.
it's ever going to be.
Yes.
Yeah, Cheesy, thanks a ton for coming on. We're getting closer to the hour. Any last thoughts you'd like to share, and where can people find you and Memento Research?
Yeah, thank you so much for inviting me to this podcast once again. Yeah, I'm in Singapore, kind of semi-docs. And yeah, if you ever want to find me, you can always just DM me, at me, or even reach out to Memento anytime. Yeah, happy to have a chat or coffee if you're ever in Singapore to talk about DeFi. So thank you so much.
Great. If I make it for again this year, I'll definitely hit you up.
For sure, for sure. Looking forward to that.
Was great having you on. Have a good one.
Thank you. You too. Have a good day.